It's a question that has echoed through the halls of finance for decades. It's whispered in anxious late-night conversations and debated on the frantic floors of stock exchanges.
Oh,
How do we navigate the chaos?
oh.
When the markets roil and the headlines scream of crashes and corrections, our most basic instinct is to react, to do anything to protect what we've built. Sell, flee to safety, cut our losses before they spiral further. It's a primal human response to perceived danger. But what if this instinct, the very thing designed to protect us, is the greatest threat to our financial future? What if the key to not just surviving but thriving is to do the exact opposite of what every fiber of our being tells us to do in a moment of panic? This brings us to a fundamental inquiry. Why is a disciplined long-term investment plan not just a good idea, but an absolute necessity for building lasting wealth? To understand its power, we have to look beyond the noise of the now. The daily, weekly, and even monthly gyrations of the market are a siren's call, luring investors toward the rocky shores of emotional decision-making. We see a stock soar and are gripped by the fear of missing out, compelling us to buy high. We see the market plunge and are seized by panic, compelling us to sell low. This cycle, repeated over and over, is the single greatest destroyer of wealth for the average investor. It's a game rigged against human psychology. Long-term investment plan is the shield against this self-destructive behavior. It's a pre-commitment, a strategic document written by your calm, rational self to be executed by your future, potentially panicked self. It acts as an anchor in a storm, holding you steady when the waves of market volatility threaten to throw you overboard. Imagine planting a young oak tree. In its first year, you might worry over every dry spell, every gust of wind, every cold snap. You might be tempted to dig it up and move it every time the conditions seem less than perfect. But a wise gardener knows that the tree's strength comes from enduring these seasons. Its roots grow deeper in search of water during a drought. Its trunk thickens to withstand the wind. The gardener doesn't react to the daily weather. They trust the long-term process of growth. They water it, ensure it gets sunlight, and protect it from genuine threats. But they let nature take its course. A long-term investment plan is your gardening strategy. It acknowledges that there will be financial droughts and storms. There will be periods of exhilarating growth and seasons of apparent dormancy. This plan forces you to define your goals with clarity. Are you investing for retirement in 30 years, a child's education in 15, a down payment on a house in 10? Each goal has a different time horizon, and your plan is tailored to that specific timeline. It dictates your asset allocation, the mix of stocks, bonds, and other investments, based not on today's hot trend, but on your long-term objectives and your personal tolerance for risk. When the market inevitably tumbles, as it has done countless times throughout history, you don't ask, "What should I do now?" Instead, you refer to your plan. The plan created during a time of clarity reminds you that these downturns are not anomalies. They are an expected part of the investment journey. It might even instruct you to continue investing systematically, allowing you to purchase more shares at lower prices, a concept known as dollar-cost averaging. This transforms a moment of market panic into an opportunity for the long-term investor. History is our greatest teacher in this regard. Consider the dot-com bubble burst in 2000. The Nasdaq, heavy with technology stocks, lost nearly 80% of its value. Investors who panicked and sold near the bottom locked in devastating losses, vowing never to trust the market again. Their emotional reaction turned a temporary paper loss into a permanent financial setback. But the investor, with a long-term plan, who understood that innovation and economic growth are persistent forces, stayed the course. They continued to invest. They knew that while individual companies might fail, the market as a whole has an undeniable upward bias over time, and they were right. The market recovered and went on to reach new, unimaginable heights. The same story played out during the financial crisis of 2008. The fear was palpable, the headlines apocalyptic. Yet those who held fast to their long-term strategies, who resisted the urge to flee, not only recouped their losses, but participated in one of the longest bull markets in history. A long-term plan is, therefore, a fortress for your portfolio. With its walls built from discipline and its foundation laid with historical perspective, It frees you from the impossible task of timing the market. No one, not even the most brilliant minds on Wall Street, can consistently predict short-term market movements. Trying to do so is a fool's errand. A long-term investor doesn't need to. Their strategy is not based on predicting the rain. It's based on building an arc. It's about recognizing that the true driver of investment returns is not short-term trading, but the long-term compounding of growth in the real economy. Businesses innovate, create value, and generate profits. By owning a diversified piece of the market, you become a beneficiary of this fundamental human progress. In the end, it's not about the charts, the tickers, or the daily noise. It's about what your investments are meant to achieve. It's about funding a future where you have the freedom to live life on your own terms. A long-term investment plan is the bridge between your financial aspirations and your future reality. It is the single most powerful tool you have to insulate your financial well-being from your own worst enemy, your emotional, short-term instincts. By committing to a strategy and staying the course, you shift your focus from the turbulence of the moment to the horizon of your life's goals. Stop being a speculator tossed about by the whims of the market and become a true investor, harnessing the enduring power of time and compounding to build a future of security and prosperity. It is a simple concept, yet its power to transform financial outcomes is nothing short of profound. The real question isn't whether you can afford to have a long-term plan. It's whether you can possibly afford not to.